May profits be upon you. Welcome to the second half of the weekly Forex forecast. You're trading with RT Money, and we are going to look at the equities and oil and gold, and silver. Let's jump into it, shall we? Yeah. Okay. I got these lines here. Why do I got these lines here? One, let's get rid of the lines. Let me make them for you right now. We're on the monthly. We're looking at the S&P, the S&P futures. We're looking at the monthly time frame. What I want you to see is this big wick here. When you see big wicks here, I don't want to see price go past the midpoint of that big wick. All right, so I'm going to stretch this out like so, and you can see price is approaching that midpoint here. All right, usually a lot of times, like between 70 and 80% of the time, when you see a big wick like this, price goes down to about 50% of it, maybe a little bit more, maybe a little bit less, and then it starts to turn around. All right, this is a wick that has a lot of bullish fair value gaps in it on the lower time frames. That's something you got to keep in mind. There's a lot of bulls, a lot of buyers here represented. Okay, and you got sellers coming in there, but there's too many buyers, and you'll see more oftentimes than not, price turn around. All right, if we go to the weekly, all right, and we're looking at the same area. Oh, I didn't mention something else. All right, this down, up, and past. When we see movement like this, I like to mark out the order block. All right. Now, one thing that bothers me about this particular order block is the fact that it doesn't have a discernible displacement. All right. I'd like to see a fair value gap uh, developed from this, formed from when price leaves this level. You don't see that happening here. All right. It's like it that I mean, there's hardly any. Okay, if there's any at all. Um, uh, but in this case, you can see price did leave that area. So I'm satisfied with the way price moves away and then comes back. But you see how it got torpedoed almost to the close and open. All right. So it's not the strongest. When I don't see that validating displacement, it kind of throws me off a little bit, but I mark it anyway. And you can see prices coming close to bouncing off of that. And it is very, the lines are for the consummate encroachment, the 50% of this candle, sorry, and the cross section of the intersection of the order block very close. So I'm looking in this area for price to turn around. All that to say that, right? All right. If we look on the weekly, what do we see? Uh, there's that wick, a big old wick, all right? And you see how price is pushing higher. We created a bullish fair value gap, a weekly bullish fair value gap. That price is still within, all right? We have to make a note that we're pretty close. And you see that that weekly fair value gap is starting right where that I marked the order block here. This is an area of fair value. When price re-enters an area of fair value, it usually pushes off, it mitigates it and moves off. And we're coming back for a second bite. So I'm looking for price to still looking for this fair value gap to hold. If it fails and it comes down in here, then I'm going to be looking at this wick and the 50% area of that wick, right? If we go to the daily, so we're still within this weekly fair value gap here, but now I want to reduce it to, or refine it to the daily fair value gap, and this one overlaps the weekly, and you can see price is still inside of it. And here is that 50% of the wick here. All right, at 50% here. All right, and we're close to this area. This is all I'm looking for. I'm looking for price to, oops, come on, man. Why do that in front of company? All right, I'm looking for price to turn around and head to this these highs. All right, this high is pretty close to that high. All right, as opposed to going all the way down in here. All right, you can see price had a tussle down here before it pushed up, taking out that high here. We see once we take out those important swing highs like that, where you see a swing high where there is another swing high on either side of it. All right. Well, I like those. All right. Those are important to me. All right. And they're important to buyers because you'll usually see the pullback on those. And if you look at this pullback, it's pretty righteous. All right. Because uh, if you put your Fibonacci retracement tool on it and you go up to the high of it and you come down to a retail uh, fib here, you can see we're right at equilibrium. We could be heading right into discount with a push down, with a push down, and then up. All right. These are the two fibs that are important in this case. And I'm looking for 618 to hold up. Okay, that's it. NQ. If we see NQ, pretty close to the same thing. We took out an important swing low here, right? And you saw how price pulled back, all right? But we pulled back over that swing high, all right, which is over a smaller swing high here. And I don't know if we get one down here. It's kind of, but you see how price tussled down here and then uh, gave us that displacement, leaving bullish fair value gaps along the way. It intended to go past this high, no doubt about that, right? So uh, when you get that pullback, I'm looking at the what do you call it? The Fibonacci uh, levels. You see that we're already at 618 for this range of price. We're already at the 618, and I'm looking for price to find support here and continue up. That's it. Find support here, and then push higher. All right, but again, if you saw the previous video that I released today, you're going to see that I think that we might see some short-term strength in the U.S. dollar, which would mean prices in the inequities, the equities market, I said inequities, will be coming down. So uh, if price does come down, and takes out that swing low here, that's not going to bother me because that's at the 718 retracement area. All right. And I'm looking for price to find its footing once it gets down to that area. This would be uh, predictable to me. This area is a predictable area for me. So if we go on the weekly, you can see that this is the 50% of this candle. All right. We've already gone through, sorry, we've already gone through a bullish fair value gap. All right. On the way down. I'm looking for price to continue down and then find its footing in this area. That's it. Simple, simple to me. Anyway, I hope I explained it in a simple manner. We had a break of market structure here, a break of structure. When I see that break of structure, I'm looking for a retracement and then higher prices after that. So we'll see. We'll have a deep dive into it, but I believe that price will turn around. All right. If we go to the Dow, you can see the same structure there, but they hit different levels, don't they? All right. If This is that swing high, that price traded above over here, and this we see the pullback. Not only did we take out that swing high, we took out this swing high here. This is uh, uh, an important high, and you had to expect a pullback. All right. Now, what did we pull back into? Fair value gaps, 1, 2. All right. Which one do I prefer? Of course, I prefer this one. All right. I would love to see. I don't mind seeing price turns around here, but the Dow Jones does acts a little different as opposed to the S&P and the NASDAQ. Sometimes it does its own thing. All right. But I'm thinking this is a high probability area to take longs from if you're trading the Dow. This one here, if price doesn't give, if it sorry, if it invalidates that a bearish fair value gap here, if you see price come up here uh, Monday and Tuesday, it invalidates a bearish fair value gap, and then price is going to probably continue higher here. Now, even though this high was taken out here on Thursday, the 29th of August, even though it took that high out, there's still liquidity up here. That's why I have the relatively equal highs up here, because I still believe this is a draw to price. It will be the draw on liquidity, and I think it's eventually going to come back up in there. So I'm looking for price to either, uh, you know, invalidate the bearish fair value gaps or continue down here and then take out those fair value gaps as it pushes back higher. So I'm looking for that. All right. I believe that we're going to have some short term strength in the US dollar. So it's kind of crazy. Now look, with gold, you see how it's moving just sideways. This isn't the greatest market to be trading. All right. But if you're going to choose between this one and silver, gold is stronger, silver is weaker. If you're going to take a short, all right, which I'm leaning towards this week because the US dollar, I think, is going to see some short term strength. Then, uh, if that's the case, I would short silver before I shorted gold. You understand? If the US dollar shows some weakness this week, as opposed to a week, as opposed to strength, then I would take the long in gold. Gold has been found support here at this order block. All right, at this level, 2512. Uh, it just one, two, three, four times. It's still price is still bouncing off of it. All right, we haven't made a new high quite a bit. All right, but I think this is a relatively easy liquid. This is low resistance liquidity up here. All right, there's low resistance liquidity down here as well. But you see how the NFP candle left it. All right, we took out the high of the previous candle and took out the low of the previous candle. All right, and we're coming down. We come down into these wicks here. I think this is a stronger market. If you're going to take a long, if you want to take a long between these two metals, gold and silver, take the long here. If you just take a quick peek at XAU, XAG. All right, this is the silver gold, uh, the gold silver uh, pair, and you can see it's bullish, right? You can see it's bullish, and it's going to head towards these highs. Gold is leading, is stronger than silver. You understand? You understand my logic now. All right. So if you're going to go back to gold, if you're going to take a long in one of these correlating indices, I mean correlating markets, take the long in gold and not the long in silver. If you look at silver, you can see how price pushed higher here. All right, pushed higher, got past that swing high, and then we have this pullback. All right, and if we see that, what do you call that near term strength in the U.S. dollar, I'm looking at gold to push down further and take this low, take that swing low. All right, and then find the strength in this low here, because this is a strong low. Why? Because it made a new high, pulled back, and I'm looking for price to go higher. Okay, that's my simple logic. If you have something to say about it, a different viewpoint, I would love to hear it in the comment section. I heard one from More Blue, my last gold analysis. and he said, "Did you look at silver?" And I always look at silver, as you guys who've been following my videos, I always look at silver, but it, it deserves more attention this time. I'm giving you a little bit more detail this time. All right, and thank you. Credit that to More Blue. He's a really good ICT trader. But uh, uh, if you're going with the short, I would be taking the short here, and I believe this will be the draw on liquidity. I hope that's easy enough to follow that logic. Boom, boom, and then we'll probably find uh, our footing here, and price will probably continue higher based on this break of market structure here. All right, if we go to oil, this is a weak market. We have created a bearish fair value gap here. All right, and I don't know if price will make it up here, but we took out some very important uh, swing lows here. And after taking out swing lows, price is probably going to pull back. All right, if we pull back, this is the area I wanted to take. I would love to take a high probability trade from to these lows. This would be my secondary target, and this would be my first target. Okay, what is that? I don't know what that is. Let me get rid of it. What the devil was that? All right, this will be my first target here, and this will be my secondary target. There's low liquidity resistance here, so I am looking at price once it pulls back. Once it pulls back, it's going to use that bearish fair value gap to go lower. All right, so it'll look something like this. All right, that's what I'm looking for. Okay, cool. Pretty much the same thing with UK oil. UK oil is just follows the leader. All right, even though it took out this swing low already, uh, it gives it more reason to pull back to a bearish fair value gap. All right, and I'm looking for that to happen this week, and maybe this to happen next week. You understand? All right. I hope that I made that clear. Uh, this week we may pull back and then get the push down next week. All right, to this low resistance liquidity over here. Okay. I think I've covered all those markets for you, and I'm hoping that you enjoyed the video. I'm going to leave links for the previous video, the part one of this Forex weekly Forex forecast, where I go over the majors and the major FX pairs. Right. Um, do not forget to leave a like to this video if you liked it. I need those boosts. I need those likes to um, build and strengthen this channel. Okay, and that's all I ask for you is to leave a like or a comment, and I appreciate all the comments. I make sure I hit you all back. I respond to all my comments, so I like to engage with my viewers. Anyway, uh, trade safely next week. May profits be upon you, and I will see you in the next video.